Hello and welcome to Hampshire First Bank's first Business First webinar. In this, we're going to go over a recent survey of our clients and prospective customers and business leaders in southern New Hampshire that have responded to a recent survey on business trends. I'm Jay Dinkle, Director of Community Banking with Hampshire First, and I'm delighted to welcome Professor John Rumps of St. Anselm's College, who will help us in reviewing some of the data and drawing some conclusions from it. Professor Rumps.
Hello. This survey was done with 138 businesses replying, and as you can see in the first slide, the businesses were pretty diverse and covered all of the different areas that would be expected in New Hampshire. 31 different classifications participated. The type of businesses involved were mainly C corporations and limited liability corporations, although many other types were covered as well, as you can see from the second slide. There isn't much to say about the survey except to say that it covered a variety of people. It covered mostly people in southern New Hampshire, and it covers all the different forms of business that you would expect in New Hampshire. Small businesses are usually defined as those that are under 100 employees. As you can see, about 85% of the respondents were small businesses. This is significant because small businesses, as we'll talk about later when we talk about the economy, have had a tougher time in the recovery than the big corporations that you read about in the Wall Street Journal and so on. Most small businesses do not participate to any great extent in export-driven trade, and the export-driven trade has been a major force in helping the economy to grow over the last 4 quarters, and these people have not participated as much. So though all those small businesses that are part of our survey are the type of businesses that have to do better as the economy increases. Revenue for the different businesses, as you can see, 50% were revenues of less than $1 million. And 20% were more than 10 million. So, even, again, the SBA defines businesses by employee strength, not by revenue. But most of these businesses, as we saw in the previous slide, are small businesses. And again, they are the ones that have been hurt the most, not necessarily by the first part of the recession, but by the lack of recovery in the second part of the recession. And that's been hurting them and hurting job growth. Again, as we saw earlier, most of the businesses are from the southern part of the state. They are located near the major centers, Manchester, Concord, Nashua, Portsmouth, and that would be what you would expect for most of the clients involved. Going on and talking about business expansion, this is what's necessary. Businesses very often, and we'll see this later in a slide, will try to cut their way through the recession. They'll try to cut costs. They're not getting growth in revenues. They're not getting growth in sales. So in order to try to meet our expectations, in order to have a profit, to cover the bottom line, they have to cut back. And that can only go on so long. At some point, you have to stop cutting. In order to grow, in order to succeed, you have to begin to increase sales. And many times that will involve capital expenditures. As you can see, over 50% of these small businesses are looking to expand in 2010, and over 70% are looking to expand in 2011. That will be important. Over 30% will look for community banks to finance their capital expenditures. That's another important thing here. These businesses have to grow. They need financing, and this market has been tough, and it's been a, everybody knows it's been a tough market. In fact, if you look at the next slide, you will see that 55% are saying that securing financing is more involved. We've all heard the horror stories about mortgages over the last couple of years, Alt-A loans and subprime loans and no documentation loans. Well, that same type of thing applied in businesses as well. It was easy to get a loan. Back in 2006, it was estimated that over 90% of applicants for small business loans received coverage. And that was normal. Business was good, times were good, it was easy to get credit. Now banks are being more careful. They're taking a look and making sure that the people that they lend to are good credit risks. But even though it is a more involved process, that you need more documentation, 63% say that, you know, while it's tough, they are still able to secure financing. In spite of all the different problems, only 20% have said that they were involved, that they were denied access to business credit. Now, many of the businesses didn't necessarily apply for credit at this time. As we said, they were looking to cut costs and they weren't looking to expand. But of those that did look for expansion, only 20% were denied. One of the next areas was what happens with employee benefits. And again, this is going to become more important. There was a story in yesterday's Wall Street Journal talking about the fact that as the recession diminishes, as people become more confident, less scared about the future, they will begin to look for better employment. Up until March, the number of people being laid off exceeded the number of people voluntarily leaving a job, which is not the norm. But beginning in March, people began to leave. And that process will continue as the job market, as people become more confident. They will begin to look for improved salaries, and they will begin to look for improved benefits. In the market that we're in, benefits may become more important because employees are looking for things, especially if taxes start to rise. They'll be looking for ways to avoid that increase in taxes, and benefits may be one way of doing that. Over one half of the people in the survey report that changes to healthcare delivery system will not negatively impact their ability to grow their business. In fact, as we've seen, many big businesses, they haven't done it yet. Obviously, the healthcare isn't going to kick in until 2013. But many businesses have been looking at the fact that they may begin to diminish their healthcare benefits, or they may reduce it altogether. In fact, in the current proposal, some big businesses like AT&T have said it would be cheaper to pay the fine than it would be to give people their healthcare business. This is something that many small businesses are going to have to look at. Will it be better to just say, all right, the government's providing healthcare, I'm not going to do it, I'll pay the fine if necessary, and let the people get their health care through there. So health care may not be that important. People may not be that concerned about their health benefits. But currently, almost 80% of the businesses do provide employee health care, and almost 50% provide dental and vision. That may be reduced, but it won't be until after 2013. Over the next couple years, benefits in general will become important. Looking at the businesses, nearly 1/3 provide benefits for their employees, and they cover 76 to 100% of their employees. And 37% of businesses have increased their portion of health care premium paid, although almost 30% have reduced their health insurance benefits. Again, that trend will probably pick up in the next couple of years as the nationalized health systems kicks in. But at present, more businesses are expanding their health care coverage rather than reducing it.